Hello everyone, happy Friday to you guys, and I'm so excited to welcome you to another promising edition on the Extra and Speed Live. Now, before we kickstart the session, let's run through our daily routine by confirming that we are all on the same page. So, if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. And thank you very much as you do so. I look forward to your feedbacks as I load up my comment box. So let's see what we have here, and thank you very much as you do so. Let's see what we have. All right. Okay. Okay, so I can see a handful of comments right here, from Sergio to then for IK 1987, Sandy 0013, Motazar Romana 85 Valley. Hello, Carrie. Yeah, good morning to you. Thank you very much. Who else is here again? Sakaraz, good morning to you. Haki88, I receive your hugs. Thank you very much. We have Petik Extrend. Okay, good morning. Haki88 again. Then we have Siop. I hope I pronounced that correctly. Petty X Train. Well, I'm doing very fine. Thank you. Petty X Train. Trust you are doing very well as well. All right. So I think with these feedbacks here, I think we are good to go this morning. And it's on this note, I welcome you once again to today's live technical session on the Extra and Speed Live as we gear up for the non-farm payroll release. This session holds heightened significance, especially as it marks the conclusion of this trading week. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I take you on a trading journey, dissecting the current market conditions using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action ahead of the New York session today. Stay tuned in for crucial insight and strategic analysis as we navigate the market on this pivotal day. Well, so far this week, we have been monitoring four major financial assets, which includes the US All Spot, the USTech100, the GBPUSD, and finally the XAUUSD, popularly known as the gold spot. And in fact, we've done pretty well since the beginning of the week. So today we are going to be diving into the structures to see how well we have done so far this week, and of course use the historical data we have on the chart to strategically position ourselves for today's trading session. Then there is one thing I usually emphasize on last trading days, which is more of a psychological expectation, as those who had bought an asset at a very cheap price and enjoyed the momentum throughout the course of the week are likely going to be closing in some of their positions ahead of the weekend. And usually this normally results in profit-taking activities, resulting in a reversal setup gradually emerging on our chart as majority round off their trading activities ahead of the weekend. So we are going to be taking all this into consideration while we review the current market conditions. Now, for those of you who are joining us for the first time, I'm very sure you will be wondering what this is all about and why is it necessary for you to stay tuned in. Well, first of all, I'm very excited to have you around, and what we simply do here is to, as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. Now, the session usually kickstarts 10 a.m. UTC, 11 a.m. West African time. And I recommend that you stay tuned in so you don't miss out on the valuable information that we will be sharing during the course of this session. Now, my aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been with us for a while, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, so far this week, and based on the asset we have been monitoring, we have been focusing on the US economic features. Well, of course, we knew that the United Kingdom does not have any high impactful event for this week. Now, for today, Friday, December 8th, we have three high impactful events coming in from the United States. Now, the first one on the watch list is the average hourly earnings. This is a data that represents the average amount earned per hour by private sector employees in the United States and is a crucial labor market indicator. Higher average hourly earnings figures are generally viewed positively by investors as they indicate wage growth and potential inflation, potentially boosting market sentiments, and conversely, stagnant or declining earnings may raise concern about economic health and sentiment. Then simultaneously with the average hourly earnings is the publication of the non-farm payroll, which is one of the most significant economic features that everyone is looking forward to today. Now, this is a key economic indicator that measures the total number of paid US workers, excluding farm, government, and non-profit organization employees. The NFP is considered to be a high impactful event because it provides insight into the overall health of the labor sector. Now, if we look at the figures here, that is, we look at the data for both of these events coming up simultaneously in about 2 to 3 hours from now, you will see that the previous data for the month of October for the average hourly earnings, so we have the month-on-month and the year-on-year. So we have the 0.2% and 4.1% respectively for the hourly earnings, and we have economists projecting a 0.3% and 4% respectively as an expectations for the month of November. So we will look forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Now, for the non-farm payroll, for the previous month, we had an expansion of 150,000, and economists are projecting 180,000 for the month of November. So from what we have here, it shows that economists are expecting an expansion to happen in the labor sector of the United States. So we're also going to be looking forward to what the actual data is going to be on that one. Then later on today, in about 6 hours from now, we will be looking forward to the publication from the University of Michigan, which is the Consumer Sentiment Index, a data which measures the level of confidence that the U.S. consumers have in the overall state of the economy. Now, this data shows a picture of whether or not consumers are willing to spend money, a key factor as consumer spending is a major driver of the U.S. economy. Now, a higher reading is generally seen as positive for market sentiment as it indicates increased consumer confidence, potentially leading to higher spending and economic growth. Now, if we look at the previous data for the month of November, it came in at 61.3, and we have economists projecting 62 for the month of December. So it's a little bit higher than the previous one. So from what we can see here, it appears that the economic features we are looking forward to today based on the economist projection, everything seems positive for the US dollar. So we shall be looking forward to see how the market participant will be anticipating this event using simple and fundamental tools such as trend lines, key levels, and chart patterns to identify potential trading setup in anticipation of this event. Now, with that being said here, we will be diving right into the details, and the first asset we will be looking at this morning is going to be I know it usually takes some time before my US All Sports loads up, so we shall be giving some couple of seconds to allow this to run. While I wait, let me see if we have any comments here. I can see Casa Forever, good morning. ETC 971, hello. Opebalo, good morning to you. 922-64469. Wazingwa, good morning to you. I hope I pronounced that correctly. CCC, I hope I pronounced that correctly too. Glad to have you guys around this morning. Okay, finally the chart has loaded up, and the next asset on our watch list for today is going to be the US All Sports. And in fact, since the beginning of this week, we have done pretty well on this particular asset. Remember that we were able to scoop in some significant amount of profit in the last 2 to 3 days, as we scooped in over 600 to 700 pips, I guess. Though the week did not really start very positive for us, remember that we had some couple of losses at the beginning of the week after price action kept on doing some consolidation phase around the $74.75 level and the $73 area. So let's look at what really happened at the beginning of the week and what led to the decisions we made. So at the beginning of the week, we initially saw a range where price was confined within the $74.75 level and the $73.50 level. Then we saw price action expanded that range into the $73 area, hereby giving us a wider range to further emphasize the level of indecision going on in this particular market. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, we have no other choice than to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. Now, we saw something happen during the first 11 hours of the week, as we saw a lot of selling pressure, and in fact price action was most of the time close to the support line of that range to emphasize the idea that sellers may likely be dictating the pace for the first half of the week. And as a result of this observation, we decided to place a sell stop order below the $73.50 level, and unfortunately our sell position did not do well at all, as we saw price action take us take us out at our stop loss as we recorded our first loss for the week. And something interesting also happened again. We saw how price action climbed up to trigger our buy stop order at the break at the $74.75 level, and immediately price dropped to the downside again, taking us out of that buy position. So we had two positions in a loss at the beginning of the week. However, thank goodness that we were able to exercise patience and stay true with our analytical approach, as the second day we were privileged to capitalize on another selling opportunity at the breakdown of the $73.50 level, as you will see here. Then we kept on adding more positions at the breakdown of the $73 level. Then remember, we also had another level at the $72.35 level, maximizing the bearish momentum. Then we also added one more at the $71.50 level. And the good news about the situation is that we were able to recoup the loss we incurred at the beginning of the week and made significant amounts of profit on top of it. Now, for those of us who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, during our live session yesterday, we begin to see an interesting trading setup gradually unfold on our chart, as we saw price action as soon as it tested the $69.30 level. We begin to notice some buy pressure resume around that area, resulting into a situation where price action was caught and confined within the $69.30 level and the $70 area to emphasize the level of indecision at that particular point in time. And one of the ways we said we will be anticipating the next move was to wait for either the breakout of the resistance line for an opportunity to buy, or the breakdown of the support line for an opportunity to sell. Well, at no point in time did we see price break down the structure, so it was more of buying this asset as we had our buy stop order triggered at the breakout of the $70 level. And in fact, this did not last long. As you see, price only moved about 60 pips thereabout before the bearish momentum came in. For me personally, I got my position taken out in a loss, but some of us must have moved our stop losses like we always do to break even at most to protect the position. And if you had done that, you must have been taken out from that position at a worst case scenario break even. Then we saw the buy pressure continue again. Remember that we had this ascending trend line identified during our live session yesterday that we said we will be using it to guide our uptrend continuation at this point in time. Price came back again, broke out of the $70 area and welcomed another buy positions, as you will see here. Then we saw this one also happen here as the breakout of the $70.60 level also welcome additional positions. So we have at this point in time, price is currently running with about 58 pips on the first buy position, while the second one is running at break even at this point due to the continued selling pressure that is happening around this area. Now, for those of us who capitalize on this opportunity, well done and kudos to you for being on standby to capitalize on this move. So the next thing I will be suggesting right now, based on what is going on here in the last couple of hours, is for us to move our stop losses and let's protect the current buy positions we have right now. And for me, based on the structure, I will be suggesting that anywhere below the $70.50 level seems most appropriate to lock in all positions, move all your stop losses into that area as we give enough space for price action to move around. So let's see how the market will play out from here. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying the US All Spot based on this temporary bullish traction we see here? Or is it time to start getting ready to join a bearish momentum to the downside. Well, before we can go into the details here, it is appropriate that we scale up into the higher time frame. Now, before we go into the higher time frame, I will quickly want to share with us the fundamental factors or the driving factors behind the scenes that is affecting the market sentiment. Now, in the last let's say in the last 10-12 hours, oil prices have rebounded from the 6-month low as Russia and Saudi Arabia advocate for adherence to OPEC plus production output cuts during their meeting yesterday. However, concerns about China's sluggish economic recovery are putting downward pressure on oil prices. Remember, China is the largest importer of crude oil in the world, and if their economy is not doing too well, that is likely going to be bringing a dent into the demand of oil, hereby inciting surplus supply in the market and resulting into price action dropping to the downside. Now, looking ahead of today's trading session, market participants will closely monitor the U.S. non-farm payrolls report and average hourly earnings, as this event could significantly impact the U.S. dollar denominated asset for today's trading session. So as we anticipate the NFP data today, it is very, very important that we protect all positions at this juncture, as we might be seeing some volatile price movement happen today. Now, with this information in mind, let's scale up into the 4 hours time frame to see what is really going on here, and in fact refresh our memories as to what we saw at the beginning of this week. Now, on the 4 hours time frame, after taking into consideration the nature of price action since the mid-month of October, we had a beautiful trading setup, as we saw that it was obvious that price action has been on a strong bearish momentum in the last 6 to 7 weeks in this market. And to further emphasize the strength of the sellers, we did connected the series of lower highs, giving us this descending trend line to work with. And of course, you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we feel very, very comfortable in our sell positions and look out for more opportunities to sell. Now, in addition to this descending trend line was our key level for the week, which was situated along the $75 area. Now, you will see how the $75 level had played a major role in determining the direction of price action since the beginning of the month of November. Now, look at what happened here. We saw buy pressure. Though we had a little bit of a breakdown here, price action came back into structure, breaking back up, and for about 2 to 3 weeks, price action remained above the $75 area to emphasize the strength of the buyers at that particular point in time. However, something interesting happened during the later part of last week's trading session, as we saw an engulfing bearish candle breaking down the structure for the first time in the last couple of weeks to incite an opportunity to sell. Now, one interesting thing about the $75 level at that juncture was how it also shares a confluence with that descending trend line. So it was a beautiful opportunity to join a decline, and thank goodness we were part of that bearish momentum as we rode that momentum all the way to the downside. Now, during the course of the week, we saw price break down this lowest point here at the $72.35 level, pushing price to the downside. Now, during our live session yesterday, we did talk about how price action is going to play out. We said here that if price action, since it has broken down the structure, that are we going to be seeing a situation where price will retrace back to either the trend line or the $72.35 level to incite a downtrend scenario, or is it going to be breaking it out to incite an uptrend continuation? Now, if we zoom into what has been going on here in the last 24 hours, you will see we actually took advantage of this move, and price is even yet to get close to that descending trend line before we begin to notice selling pressure resume around this area. Now, the question going into today's trading session is, will the selling pressure here persist, maybe come back and continue to incite more selling opportunities to join the decline? Or are we going to be seeing price break out, retest to incite an uptrend move? So we are at a crucial juncture here, but one thing I would like to emphasize here is that the outlook of this market is more or less bearish, especially after price did break down both the descending trend line here and that $72.35 level. So we will continue to see if the market will maintain the bearish momentum here. And to see that clearly, we want to scale down into the lower time frame to see how market participants have been reacting to that area around the $71 level. Now, scaling back down into the 1 hour time frame, we will begin to see things more clearly. So let me zoom right into the current structure so that we can see things more clearly. So we have this right here, the $71.50 level, sharing a beautiful confluence with that descending trend line. So as it is right now, and based on what has been going on in this market in the last 48 hours, that is 2 days, you will see that price action has been finding some series of higher lows here, giving us the inclination of a potential uptrend continuation. Look at higher lows, though we had a little bit of a breakdown of the structure here. But if you look at the nature of these candles, it's a sharp rejection, showing us signs that sellers are finding it difficult to settle below that low. Then we have this hammer candle springing out from this area, another higher low here. Now price is back into the structure. Now the question here is, will this bearish momentum transition into price action retesting either of these trend lines? It could be this one or this one right here, where the reemergence of buying pressure, maybe price transitioning into a reversal pattern like a double bottom structure. It will be inciting another wave of bullish momentum. Or are we going to be seeing a breakdown of this trend line to incite a sell-off here? So we are at a very crucial juncture here. That is why I did mention earlier that we do want to be moving our stop losses on all buy positions and secure the current positions we have right now. So with the way things are going right now, we need to exercise patience. We are at a crucial juncture. Remember, we have our ascending trend lines intact, and you know how we use our ascending trend lines. As long as price remains above the ascending trend line, we shall feel comfortable in our buy position. So let's see how the market will react to the structure. Are we going to be seeing some buy pressure here to incite an uptrend move, or will price drop into the ascending trend line here, resulting into a reversal pattern to incite an uptrend continuation? So this is what we will be looking out for to join an uptrend move. And if price continues to climb up, we have levels such as the $71.50 level, as you will see here, to add more positions to our existing trade, and a further breakout of the $72.35 level will be welcoming more buy positions to our existing trade. Now, in as much as we still maintain a bullish bias here based on the respect of the ascending trend line here, we cannot ignore the potentials of sellers. Remember, I said earlier, especially after looking at the higher time frame, that price action and the market outlook is still looking very, very bearish. Now, if this is going to be the case, joining a bearish opportunity will be reasonable only if price action breaks down this trend line and continued selling pressure persists around this area. Then we can join the decline to the downside. Now, if the decline continues, then the breakdown of the lowest point price action has been for this week at the $69 $5.30 level will be welcoming more sell positions for us to capitalize on. So this is our simple setup for today's trading session. Let's mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions. Remember, we are still on a bullish outlook here. Price is still above our ascending trend line. We maintain a bullish bias, and the only condition that will make us sell is for this ascending trend lines to be broken and retested to the downside. So these are my views. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we will be moving on to the next asset on our watch list. You can use that time also to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so I see a couple of comments here from Valiha, good morning. Edwin0120, good morning. Dank KK, and then Colic79, all right. D Kramer, good morning to you. Someone here says we should come and eat grape and rice. Good morning, Mr. Zul. Good morning to you. Thank you very much. Peace be unto you too. Marshall55 and Manuyu621. Good morning to you all, guys, and glad to have you around with us this morning. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page, and I'm permitted to move on to the next assets on our watch list. So the next asset we are going to be looking at this morning is going to be the USTech100. And in fact, on this particular asset, we've had tremendous profit as we were able to join all the nuances of price movement throughout the course of the week. We had both buying and selling opportunities at both instances. They all did very, very well as we capitalized significant amounts of profit on this particular asset. Well, let's run through how the week started for us all in this community on this one, and let's see what led to the decisions we made throughout the course of the week. Now, at the beginning of the week, it was more of a consolidation phase. Remember, we saw price action ranging between the 15,995 level and the 15,932 area to emphasize the level of indecision at this particular point in time. And for the fact that price action was within a range, you know how we do it. Whenever we see this kind of setups, we wait patiently for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, during our live session on Monday, we saw our price action was pending most of the last 6 to 7 hours within the support line of that range. And in fact, we had a couple of breakdown of that support line to further emphasize our sellers were trying to dictate the pace for the first half of the week. And with this observation, we position ourselves just right below that support line of the range at the 15,932 to trigger our first sell position for the week. Then we kept on adding more positions. Remember, we did added another level at the 15,900 where we said if price breaks down, we had more positions. Then we also added one more at the breakdown of the 15,835. We also added one more here and capitalized on this move before that bullish momentum came in to take us out of those sell position. So on that single move on Monday, trading activities, we were able to scoop in close to 400 pips as we took advantage of those multiple entries. Now on Tuesday's trading session, we begin to notice a different scenario from what we saw at the beginning of the week, as we begin to notice that sellers were finding it difficult to break through the $15,470 area, and the appearance of buy pressure during our live session on Tuesday around this area for us was a signal that buyers may likely be taking over this market. But for the fact that price action was still trading below this newly identified descending trend line, we decided to remain patient and wait for the trend line to be broken before we consider buying this asset. So we saw price break out of the trend line, and in fact we had our buy stop order sitting above the 15,835 to capitalize on that move. And in fact, if you missed out on that one, we saw how the market came back, retest the structure to incite an uptrend continuation. So on that single move, we had about 160 pips move, and if you capitalize on the multiple entries we marked out there, you would have maximized the potential of that bullish move before the bearish momentum came in again. Then on Wednesday, we also positioned ourselves for selling opportunities only below the 15,932, and we saw price move about 160 pips. And during our live session yesterday, we begin to notice that sellers were finding it difficult to break through that area. And if you remember vividly, we said that we will be buying only if price action will break out of the 15,835, and in fact this happened a couple of hours into the New York session, welcoming another buy position as we rode that momentum all the way to the upside. And if you remember vividly, we had multiple levels marked out on the chart. As we said, we will be adding more positions at the breakout of the 15,900, 15,932, 15,962, and finally the 15,995 level. So we've made quite a tremendously amount of profit on this asset as we capitalized on both buying and selling opportunities as they come in at every point in time. So on the USTech100, we should be closing in around the 1,000 pips area on this particular asset. And for those of us who capitalize on these opportunities, well done and kudos to you for being on standby to capitalize on this current position. Now, for those who still maintain a buy position at this particular point in time, that is, if you still have your buy positions running, you do want to be moving your stop losses accordingly, securing this current position. And I'm of the opinion that anywhere around the 15,980 and the 15,960 seems most appropriate, as we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, and as we anticipate the NFP data coming up later today, how do we intend to capitalize on the next move? Are we going to continue buying the US Tech 100, or are there chances that sellers could come in and profit taking will happen ahead of the weekend? Well, the answer lies within the 1 hour time frame that we have here, and because of time, let's just run through what is really going on at this point. So this morning, while I was trying to dissect the current market structure, one thing that caught my attention is the fact that price action has finally broken out of that range that we identified at the beginning of the week. Remember, we saw how price was confined within the 15,995 level and the 15,932 area. Now remember that through the course of this week, this area here was more of a selling niche. As you will see, every attempt by the buyers to break out of the zone was at every point in time negated by the sellers. Look at what happened here on Tuesday. The same thing happened on Tuesday. Wednesday's trading session, look at what happened. Selling pressure. Wednesday New York session, we saw selling pressure again. And right now, we saw what happened yesterday as price action finally broke out of that range to emphasize that buyers are gradually gaining momentum. And in fact, we saw price action come back to retest the structure, and we saw engulfing bullish candle build up in the last 3 hours. Now the question here is that have buyers started gaining the momentum as they finally broke out of that selling niche? Well, it appears so, and as long as price action remains above the 15,995 area, we shall continue to maintain a bullish bias. Now, in preparation for today's trading session, we have the highest point for this week, which is situated at the 16,045 level. So we do want to be marking out this level on our chart right away, as a breakout of this level will be welcoming more buy positions in this particular market. So the 16,045 area is the highest point price action has been for this week, and if price goes on to break out of that structure, we definitely want to be adding more buy positions to our existing trade. However, if this does not happen, and probably this breakout of the 15,995 level that happened yesterday turns out to be a false breakout, then I will want to be seeing price trade below the 15,995 level to start considering selling. Remember, below the 15,995 is a seller's territory since the beginning of the week. So if price action at any point in time today drops below the structure and continued selling pressure happens below this area, we will be looking out for selling opportunities to the downside. So it's a simple setup we have on the USTech100 for today's trading session. As price, our center of focus for today is basically going to be between the $16,045 level and the 15,995 area, where depending on the direction of the breakout and retest of the structure will be giving us an insight into where price is likely going to be closing for today's trading session. So let's be on standby to capitalize on this opportunity. So I do encourage us all to mark out these levels on our chart, and let's ensure that we be on standby to capitalize on that move. So this is my simple perspective on the USTech100. If you have any questions, feel free to let me know in the comment section. And I'm going to be taking the next 5 seconds in this time around because of we have less time to work with. So in the next 5 seconds, I will wait for your comment. Use that time also to mark out these levels on your chart. Hey Steamroller, how are you doing today? Glad to have you around. You're coming in late, right? I was work and trust you are doing very, very well. I'm very sure you'll be very busy. Glad to have you around with us this morning. Hemi 3000, good morning to you. Glad to have you around with us too. All right, so in the absence of no questions and because of the short of time, let's run through, let's move on to the next assets on our watch list for today. So the next asset on our watch list for today is the GBPUSD, that is the cable market. And in fact, on this asset, we've done very well since the beginning of this week, though we had a stop loss hit yesterday during the New York session after price did break out of that descending trend line, as we agreed we will be buying at that point, but unfortunately we were got taken out. We are going to be talking about that in a moment. Well, the GBPUSD has been doing very well since the beginning of the week. Remember, we have been selling this asset, and in fact we were able to make over 300 pips from multiple sell positions since price broke down the 1.266800 level. Now, at this point in time, the GBPUSD appears to be consolidating in a tight range between the 1.26050 level and the 1.25500 area since in the last 2 to 3 days now, to emphasize the level of indecision at this particular point in time. And I'm of the opinion that market participants are choosing to wait on the sidelines in anticipation of the upcoming U.S. non-farm payroll report before making any informed decisions, as you will see on this current market structure. Now, Andrew Baylis during the course of the week had a recent remark where he suggested that the Bank of England is likely going to maintain the interest rate at 5.25 not only next week but also through the second quarter of 2024. Now, today, market participants will be closely watching the U.S. employment data, which is expected to show a growth, a 180,000 increase in non-farm payroll for the month of November. Now, it is expected that a stronger than expected report could bolster the US dollar, potentially limiting the upside of the GBP USD pair. And in this regard, we shall closely monitor price action, and I want you to understand that we are at a crucial juncture in this market, and we need some significant guiding light to help us make an informed trading decisions for today. Now, before we go into the technical details of how we are going to be positioning ourselves for today's trading session, let's run through what really happened at the beginning of the week and what led to the decisions we made. Now, at the beginning of the week, it was more of a volatile price movement, leading into a wide range of trading activities at the beginning of the week, as we saw price action confined within the 1.27250 and the 1.26680 area to emphasize the indecision at the beginning of the week. Now, remember that price action was trading below our key level for the week, and you know how we use our key levels in this community. As long as price action remains below the key level, we continue to look out for patterns and structures that supports the idea of selling. Then secondly, we noticed something intriguing during the first 12 hours of the week, as price action was more of trading closer to the support line of that range, and in fact we saw multiple breakdown of the support line to incite the idea that sellers might be dictating the pace for the week. And as a result of this observation, we decided to place a sell stop order below the 1.26680 level to trigger our first sell position for the week. Then we continued to add more positions. Remember, we sold again at the breakdown of the 1.26180 level. Remember, we also added one more position at the breakdown of the 1.26050 level, and on Wednesday we also added another one at the breakdown of the 1.25800 level. So it was a very, very profitable first half of the week for us all in this community. Now, during our live session yesterday, we began to notice an interesting build up in price action. Now we saw that as soon as price got to this lowest point around the 1.25500 level, we begin to notice the resumption of buy pressure. Now at this point we couldn't buy right away from that area because of the fact that price action was still trading below our descending trend line. And you know how we use our descending trend lines in this community, that as long as price remains below the trend line, we have no business buying that particular asset. So what we did here yesterday and what we agreed was that we shall wait for the trend line to be broken to the upside before we capitalize on an opportunity to buy. So we decided to buy at the breakout retest. We had a level at the 1.2580 level to guide our trading decisions, but unfortunately for us all, especially for those who capitalize on this opportunity, price only moved about 15 pips before it took us out of that buy position in a loss. So the first buy positions went into a loss. Price came back again to trigger another buy position again, and at this time price action is back into profit of about 2 pips thereabout. Now kudos to those who recaptured this buy position, and if you didn't do so, it might make quite a lot of sense having a position above the 1.25800 level. Now with this information here, we still have a buy position running at this point, and we still hope that this momentum is established and continue to find new highs. However, before we finalize on this structure, let's run through the 4 hours time frame to have an holistic perspective into what is going on in this particular market. Now remember that at the beginning of the week we did observe that on the 4 hours time frame, after taking into consideration the nature of price action since the beginning of the month of November, that price action on this asset has been bullish. And to further emphasize this bullish momentum, we saw our price transition into an ascending channel. So we connected the series of higher lows, giving us the support line of that channel, and then the series of higher highs gave us the resistant line of that channel. Now something interesting happened at the beginning of this week, as we saw for the first time in the last 3 weeks, price action did break down that ascending trend line, then went on to break down this level at the 1.262 to incite a sell-off here. Now something interesting is going on here in the last 36 hours. Now as you will see that as soon as price tested the 1.25500 level, we begin to notice the resumption of buy pressure again. And in fact, if we go to as far back as the second week of the month of November, you will see how this level had played a major role in determining direction of price action. So we have it at the psychological area. So you do want to be labeling this 1.25500 level right there. Now look at what happened during the second week of November. More of a selling niche. Buyers tried to break out the structure, but they failed. Then finally this level was broken during the last week of the month of November. Now price action is back into that level. Look at buy pressure again, and in the last 4 hours you can see buy pressure has resumed around that area again. Now what does this tell us based on what we are seeing so far? Well, it's quite simple. It just shows us that this area at the 1.255 area is likely going to be our center of focus for today, as depending on how price reacts to the structure will determine what our next line of action will be. Now, if we consider what has been going on here in the last 24 hours, we might likely be seeing a transition of price action into a reversal pattern in the form of a double bottom structure, where the breakout of the neckline will be all we need to capitalize on an uptrend move, maybe in anticipation of the retest of this ascending trend line that was broken, but pending the time that happens, we shall maintain a bullish bias in that regard as long as price action remains above the 1.25500 level. Now, to sell this asset, we will need price action to take out all the buy positions within the 1.2550 area to feel comfortable joining any bearish momentum. So you can see how crucial this juncture is, and with the information we have gathered now, let's scale down into the 1 hour time frame and let's see how the market participants have been reacting to this level and see how we will be positioning ourselves for today's trading session. Now, scaling back down into the 1 hour time frame and zooming into this current structure, I will still maintain a bullish bias. And why is that so? Well, since where's this trading session, you will see how the 1.25500 level had played a major role in negating all attempt by the sellers to break through that structure. Now, with the situation we have here, it is very, very likely that price will continue to the upside, and with a buy position running at this point in time, we will be looking forward to more opportunities to maximize the potential of this bullish move, like the breakout of the 1.26050 level, adding more position at the breakout of the 1.2618 and the 1.264 as we ride the momentum all the way to the upside. So as it is right now, and for the fact that price action remains above the 1.2550 level, we maintain a bullish bias. However, if at any point in time today price action does break down the 1.25500 level, then we want to be changing our bias from bullish to bearish. So the only condition that will make us sell the GBPUSD today is for price action to slice through the 1.25500 level. So this is my simple view on the GBPUSD for today. So let's mark out these levels on our chart and let's see how price action will play out from this point in time. So we remain bullish as long as price remains above the 1.2550 level, and we only consider to sell at the breakdown retest of the 1.25500 level. So that is my simple view. If you have any questions, feel free to let me know in the comment section. And because of the lack of time we have, I will just take the next 2 seconds to see if there are any questions before we move on to the last asset on our watch list for today. So in the absence of no questions, let's run through the last asset on our watch list. So the next asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot, and we've continued to maintain our bullish bias so far in the last 48 to 60 hours in this particular market. Now, the buy positions we re-entered yesterday remains very much intact as the price of gold continues to struggle to make any significant headway during the Asian session. Now, a resurgence in US bond yield has once again bolstered the demand for the US dollar, holding back any substantial gain ahead of the NFP release. Now, despite this, trading activities have managed to stay in a positive territory. As you will see, price action still remains above the $2,025 level that we identified a couple of days ago, and we agreed that as long as price action remains above this level, we will continue to maintain a bullish bias. Now, this is going on for the third consecutive day, reflecting the growing belief that the Federal Reserve has concluded its policy tightening campaign. However, it seems that buyers are awaiting the release of the highly anticipated U.S. non-farm payroll report later today, hoping for indications of a weaker labor market. Such a scenario will increase the likelihood of a rate cut by the Fed and could provide positive momentum for gold today. So our trading activities will be guided by these recent structures we identified here. And before I deliberate further into the details of what we will be using to guide our decisions, let's quickly, and for the sake of those who missed out on our earlier sessions, to have a look into how the week started for us this week. Now, it was more of a very, very volatile price movement at the beginning of the week, which was as a result of some couple of factors from both psychological perspective and, of course, the attack on the U.S. Vessel on the Red Sea Sunday stroke Monday morning. And of course, this allowed the gold price to skyrocket into a record high at the 2,143 level, as market participants were uncertain how the US was going to respond to that attack. But afterwards, we begin to see some normalcy after market participants digested the implication of that attack, as we saw price drop back down into the support line of where price started the week. Then we noticed something interesting during the early hours of the week, as we saw price was more or less trading close to the support line of that range to emphasize the potentials that sellers could push price to the downside. And in fact, during our live session on Monday, we already saw price action break it down the $2,072 level, and I did mention that a retest of structure will be all we need to join a decline to the downside, which was exactly what happened. So we had about 3 positions. Remember, we sold the $2,072 level. We added more positions at the breakdown of the 2050. Then we added the final one, had the breakdown of the 2035 level, right in the move all the way into the 2010 before buying pressure resumed again. So we were able to scoop in a minimum of 650 pips in profit on the 3 sell positions. Now, since Tuesday's trading session, we have noticed how buyers have continued to negate any further movement of price action to the south. So we saw here our price had transitioned into series of higher lows, and when we connect the series of higher lows, we have this beautiful ascending trend line which has been supporting this bullish momentum in the last couple of days. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in our buy position, and of course look out for more opportunities to buy that particular asset. Then another key thing that we identified also was this descending trend line, which was broken to the upside, and price action has since remained above this descending trend line. So all of these factors here from a technical perspective was screaming bullish, bullish, bullish. So yesterday we had an opportunity to join a bullish opportunity. So we said here that as long as price remains above the 2025 level, we buy, right? And then we added more position at the breakout of the 2030, then added one more as price action triggered our buy stop order. had a $2,037.50 level. So we were able to scoop in. You see price moved about 150 for the first buy position. The second buy position moved about 100 pips, while the third one moved about 30 pips before this bearish momentum happened. And I do hope you moved your stop losses accordingly. Remember what we used to do in this community. When price action moves significantly well, we move our stop losses and protect all our position. And if you had done that, you must have been taken out with a reasonable amount of profit. Then again, price came back into the 2025 area, triggered again another buy position, and currently I'm having two buy positions running. The first one here is running with about 39 pips in profit, while the second one at the breakout of the 2030 is running with a loss of 10 pips. So if you had these positions, if you are taking it just like I did, well done to you. We have two positions running. One is running in profit, while the other one is running in a little bit of loss. So what I will be suggesting you do right now is to move all stop losses on this buy positions to anywhere below the $2,025 area. Let's ensure that we give enough breathing space for price action to move around. So with a well secured position at this juncture, how do we intend to capitalize on the next trading opportunity? Well, at this point in time, I still maintain a bullish bias based on some couple of factors. In fact, we have three factors here that will be guiding our bullish ideas today. Now, the first one on our list is the descending trend line. You will see price remains above the descending trend line. That means that price is not within the seller's territory, as the seller's territory is considered to be below the descending trend line. And for the fact that price remains above this descending trend line, we maintain a bullish outlook. Now, secondly, we have an ascending trend line to work with, and you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we feel comfortable in our buy position. So that's the second factor that will be guiding our trading decisions from a technical standpoint. Now, the third one, which is the final one, is the $2,025 level. Now, if you look at the $2,025 area since the beginning of this week, you will see how it has played a major role in negating sellers' attempts. Though we had a couple of breakdown of the structure, but you will see how buyers maintained their stance even after those breakdown happened. Look at what happened here on Monday. Buy pressure with an engulfing bullish candle. Look at what happened here again, an engulfing bullish candle from the 2025 level. We saw what happened here again, price buy pressure. We saw what happened here on Wednesday, buy pressure again from this area. Then we saw here on Thursday's trading session, that was yesterday, buy pressure, and in fact with a strong volatile bearish momentum, despite the strong engulfing bearish candle, price was unable to close down below that structure, which further emphasized how strong the buyers are around this area. And this simply tells me that as long as price remains above the 2025 level, we shall maintain a bullish bias in this particular market. So as it is right now, we maintain a bullish bias. Look out for more buying opportunities. And in fact, if price action will break out of the $2,037.50 level, well, I'm of the opinion that this is going to incite a massive move to the upside. So I have a buy stop order above that structure, and then above the $2,050 area welcomes more opportunities if price action break out and retest that structure. So this is my bias on the XAUUSD for today. I maintain bullish bias here. However, in as much as we're looking out for buying opportunity, we cannot ignore the potentials that sellers could come in at any point in time, and that the NFP data today could bring in some significant or beyond expectations figures that could signal price action dropping to the downside in favor of the US dollar. Now, what is it that we want to see on this chart that will make us feel confident and comfortable joining a bearish momentum? Well, first of all, I will need price action to take out the $2,020 level before I can feel comfortable joining any bearish momentum. However, if price action, the question here is, can we see an opportunity to join the bearish momentum even before the breakdown of the $2,020 happens? Well, the only condition that will make me want to be selling even before the 2020 happens is for me to see significant and series of lower lows and lower highs, emphasizing the build-up of bearish momentum even before the breakdown of the 2020 happens. So if I will give a visual representation of what that would look like, then I want to see something like this. First of all, the breakdown, then retest of the ascending trend line. Then if continued selling pressure persists, where we have series of lower lows and lower highs on our lower time frame, then we could actually risk some sell positions there, then have a sell stop below the $2,020 area to maximize the potential of that bearish move. So these are the conditions that will make me want to consider selling at this particular point in time. So let's see how the market will play out. It will take about 2 to 3 hours before we see some significant setup unfold on this chart. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And let me reiterate those significant levels that I've mentioned. The first one here is the descending trend line. If price action still stays above the descending trend line, we are still within the buyer's territory. And if price drops below the descending trend line, then we are back into the seller's territory. Then the second one you want to be marking out on your chart is this ascending trend line, and you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we feel comfortable in our buy position. And the final one is the 2025 level, which has been a strong buying niche since the beginning of this week. And as long as price remains above this level, we feel comfortable in a bullish opportunity. So these are my views on the XAUUSD. I'm roughly out of time, and if you have any questions, feel free to let me know in the comment section. Because of time, I will be rounding off, but while I'm rounding off, if I see any questions in the comment section, I will attend to them in due time. I see your comment here, Steamroller. Steamroller is asking, how will NFP affect gold prices? Well, I think I mentioned that a couple of times during my analysis today, and I did mention how buyers will be waiting for the release of this UN non-farm payroll report, hoping that indications of a weaker labor market. So if we have a weaker labor market, maybe something like the data coming in below expectations or just as expected, then price of gold is likely going to be climbing to the upside. But if we do see something like a beyond expectation figure, then the chances that price will drop to the downside will increase. But because of this, we should not just hold on to this idea, but we want to be as dynamic as possible. So that is why we have the levels we have on this chart. Mark them out as these levels and structures here will be our guiding light for today's trading session, irrespective of whatever the data will be. So I think I've answered your question there, Steamroller. On this note, I want to round off for today's trading session. It has been a wonderful moment with you guys today. And so far this week, we've done very, very well. Monday, Tuesday, Wednesday, Thursday, and today, let's see if we can replicate what we have been doing so far for this week. Now, we've attended to like 4 assets today. We did the USTech100, the USOILSPOT, the GBPUSD, and finally the XAUUSD, all of which we were able to identify simple trading setup using fundamental tools such as trend lines, key levels, and chart patterns to strategically position ourselves ahead of today's trading session. And I also mentioned how today is likely going to be bringing in some volatility due to the high impactful event coming in from the US economic docket. So in that regard, let's ensure that we move our stop losses accordingly, secure all current positions we have running at this particular point in time. Now, I usually mention this, that every decisions we make in the financial market is always considered to be an educated guess. Hence, you do want to be having a well-defined risk management strategy that will help us to protect our portfolio against any sudden pullback and make us to be able to live to trade another day. Now, for those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of the subsequent editions, trust me, the more time you spend with us, the better you will get in understanding our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So once again, welcome and looking forward to seeing more of you. Same time on Monday morning, 10 a.m. UTC, 11 a.m. West African time, as we come here again to start the new week on a positive note. So with that being said, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening and a happy weekend. Bye bye.